I am not a financial advisor, and I never give financial advice on this channel. 100% of this content is for entertainment purposes only. Hello everybody, hope you're doing well. It's Lane here with MetaShackle. Today I'm going to be going over the CHAINLINK charts that recently placed in the poll that I put in the post tab on my channel. And I'm simply putting them up in the order that I've received them on the channel. And since XLM was the winner, CHAINLINK was second, I'm actually going to do the CHAINLINK video first and then go over the XLM video, putting it together tomorrow because there's some extra information I wanted to put in that video. But that will also be coming out just so that you're aware. So let's get into the chart. The first chart that we're looking at is the weekly chart going all the way back to September 25th, 2017. And you can see that CHAINLINK has actually been trading in this nice pattern, a nice wedge pattern. Now, it has been true to this line the entire time that it has traded. Obviously, at one point, this line would have been more like this. So it has fallen through this line, having to have this line adjusted to fit the pattern properly. But this does happen quite a bit in charts as they continue to expand over time. But there's some interesting things to see here on the weekly chart. First off, just to give you the wider perspective of what's going on overall. We have formed many of these wedge patterns to which these broke out numerous times before setting the all-time high right here. One thing I do want to point out is the 5-wave pattern that I'm always talking about, which is a simple wave count and has nothing to do with Elliott wave theory. 1, 2, 3, 4, 5 into the breakout. Then I want you to notice this pattern right here. 1, 2, 3, 4, breaking out on the 5th wave, but then having a flash crash right here that took it past the pattern low, sweeping all the sell-side liquidity before rallying. I am expecting something similar to this is going to happen in April. Same thing happened here. 1, 2, 3, 4, breaking out on the 5th before hitting the all-time high and the pattern breaking down. We had quite an area of accumulation right through here, which went from about May 2022 before breaking out in October of 2023. We also got a little bit of accumulation right in here before we saw the Trump pump. Odds are it probably cut it off a little sooner than it should have been, chasing this up to the upper wedge and setting the second point that we need to set the upper trend line on this pattern. And much like the bottom trend line, the same thing would have applied to this upper trend line at one point before falling back into the wedge. So there's a couple different ways to look at this. I'm choosing to look at it this way for demonstration purposes because it's cleaner. Now I'm going to get rid of these just to get rid of the distractions. So there's something very important that I want you to see about this pattern. Once we formed this pattern here, breaking out of it, we formed a support zone off of the previous high. Once this broke out here, it was the last time price ever traded below this first support level on this liquidation candle here. After breaking out past this high here, it created another support level, which broke up to the all-time high, coming back down and trading in this area to which only a single candle ever broke below that zone again, this liquidation candle right here. Then we broke out in this area, coming back down for a little bit of accumulation, which started with a liquidation candle right here, which came down, giving us the second point to set this lower trend line. We broke out on the Trump pump right here, coming up to the top of the wedge, setting that second point, then falling back to current price. So we did break through this support level right here with this liquidation candle after forming it. But one thing you should take a look at on this chart that you notice is before each breakout, here and here, the liquidation candle dropped below the support level, which is the exact same thing we have seen here. It only did it one time each time that it did it, and it has already done it here, creating a perfect support zone in this area, which is a good thing because not only do we have this lower trend line as a support zone for the current price, but if it does break through this lower trend line, we can now fall back on this third support zone right here, coming in right at about $9.50. So we have multiple layers of support at this point to hold up price. Now taking a look at this, what do you think is going to happen? If you look at the new pattern since it broke up, it's giving us a 1, 2, 3, 4 count. So the fifth wave would come next. And as you all know, I'm expecting a flash crash at approximately mid to late April, of which the pattern would resemble something like this. And if that is in fact the case, we would see the fifth wave move up here, possibly do a fake out just above the upper trend line, falling back down into this pattern, perhaps touching this trend line before the flash crash, and at the very most, I would expect it to come down to this support level. If it gets really bad, it might take out this low right here. But it's unlikely that's going to be the case, because even with the previous liquidation candle of this magnitude, it just dipped below the support level, and it was the only candle. So it's likely that if we do get the liquidation candle in April, as I'm theorizing, that it will likely stay above this level of support. So looking at this chart, which is going to zoom in on this part of what we were just looking at. So zooming in on this part of the chart, as you can see, there is a lot going on in this chart. First off, I will point out that we have the same 5-wave pattern that we've had in most of the other charts we've looked at. 1, 2, 3, 4. We may have already bottomed out on this pattern here. I still don't believe that's the case. I still think we're at least going to come down to this line here. And it seems like it would be very likely that we would at least want to sweep the liquidity in this area, taking this low out, but that doesn't necessarily mean that that's going to be the case. This is the fifth leg, which I believe is going to be the false breakout, moving into mid to late April, into the flash crash, bottoming out here in this approximate range, then heading off on the true breakout on the 7th wave. So I'm going to get rid of this just to make the chart easier to see, and I'm going to keep the 6th and 7th wave intact. So first off, you'll notice that right here at the very bottom, we have a fair value gap. This is a BISI. A BISI means a buy-side imbalance, sell-side inefficiency, which formed right down here. Now, after coming up here through the equilibrium zone and trading down, it drew on the liquidity right here with this liquidity candle. It also came back for another one right here. So we know that this BISI is going to most likely act as a support zone. And if you look at the chart right here, we also have the support level number 3 swinging through the pattern here as well, which perfectly acted as support for this liquidity candle here. So there's a very good chance that when the flash crash comes, it will not fill this fair value gap because it's already acted as support numerous times. This means that when weakness is coming into it, it's hitting strength. So as sell pressure hits it, you're going to get like a trampoline effect coming out of this. So it would make sense that it would want to come down here on the flash crash and draw into liquidity in this area. At the very worst, I would expect it to fill this gap, taking out this previous low. Now moving to what would be the real breakout moving into the month of May. We have a SIBI right here, which is a fair value gap. This is a sell-side imbalance, buy-side inefficiency. As you can see, this occurred when price was falling. This means anything bullish moving into it will likely be absorbed by it. So I would imagine the false breakout leg that will head up on the 5th wave will likely get stopped somewhere in this area. What we would want to see is this gap getting filled. But this is a good area of where it could get rejected before the flash crash in mid to late April. Then once coming down here, drawing on liquidity during the flash crash, if it breaks through this here, challenging this upper trend line, now we are going to run into 2 more of these fair value gaps, both of which are SIBIs, going all the way back to this part on the chart right here. The top one is after we set the all-time high. We fell down in a waterfall motion, forming the fair value gap right here, as you can see, which had a draw on liquidity right here. In SMC terms, this is considered to be a breaker or a breaker block, which we had a second draw on liquidity filling the gap before waterfalling off of this into utter catastrophe. This fair value gap formed right here, these will carry through. This also had nearly a draw on liquidity there. So you can see that both of these fair value gaps repelled price. And price only revisited that lower one when it set this high right here, tapping it once, pulling back, taking a second run, getting rejected. So you can see that this fair value gap is not going to be the easiest thing to cross. But if it can get through this, it may be rejected off of this one here, much like we saw in theta on that chart. If we can get to this and get rejected, there's a chance that we will actually retest this lower trend line. If we don't quite go that low, this SIBI, which was once bearish and hard to get through, will act as support on the way coming back down, giving more strength to the pattern for the upside. If price breaks through this, gets rejected off of this SIBI, then this will act as support. Then this will have a stronger case for acting as support to give it more momentum for breaking through this upper SIBI. And when you look at this chart, there's virtually no resistance up there. There's probably a pool of liquidity somewhere up in here that it will have to fight to get through. But if it can get through this SIBI right here, then we could take a run at the all-time high, which is right here on the chart. This could get very, very interesting. There are so many things working to protect the downside of this by having the support level, which is coinciding with the fair value gap right here. It's a bullish fair value gap, which will likely repel anything that comes into it from above. We have this lower trend line of the pattern right here, which could be indicating that this is the bottom. We have a weak doji set up right here on the chart, which could also potentially mark a bottom. So there's quite a bit to look at in this chart in regards to structure below the current pattern. Now we're trading below equilibrium. So once we get down to the proper range, equilibrium is going to draw price to it like a magnet. Generally, once you form a candle above this, like we did right here, price is repelled by it in the opposite direction. So it will draw it like a magnet and then spit it out the other side, essentially, is often how these patterns work. So these will definitely be the levels to watch. We also have the pattern high marked right here in the top of this SIBI. It's no coincidence that the top of this fair value gap right here basically coincides perfectly with the number 6 line on my fib retracement levels. So this is all something to consider, all of these levels. This low sitting right at around $8. If it sweeps this low, it likely wouldn't last long. If it fills this gap, we could be looking about 768 level. If it comes down and bounces off of this support level, which is the most likely candidate, as it has never crossed over a support level since it's been traded twice. So this support level right here, which is at $9.33, is the strongest line of support. This weak doji is a very likely candidate of where price could go, which is sitting at $10.32. And if we have set the bottom, then obviously this is the bottom at $11.89. We also have this lower trend line. So thank you so much for watching this video. I hope you've enjoyed it. Please do me a favor and hit the like button. It doesn't cost you anything and it really helps the channel, and I'd really appreciate it. Keep your eyes peeled for the XLM video, as it will be coming very soon. Thank you for watching. Have a great day.
A naked blonde walks into a bar with a poodle under one arm and a 2-foot salami under the other. She lays the poodle on the table. Bartender says, "I suppose you won't be needing a drink." Naked lady says, "Don't you